This is Horizons Middle East and Africa. Our top stories this morning. Brent breaks above $100 a barrel as the war in Iran kicks back into escalation mode. Trump threatens a massive attack. The Houthis threaten a second front to the war. The AI trade falters. Capital expenditure forces investors to consider capital return. The Magnificent Seven lose almost $800 billion in value in just yesterday's session, the biggest sell-off since Liberation Day. And just in time for Liberation Day 2.0, President Trump institutes a new wave of tariffs to rebuild a trade wall struck down by the Supreme Court. That new tariff regime comes into effect right now. It's 8 a.m. across the Emirates, 6 a.m. here in Brussels, and midnight over in the United States, which is why we now have this new tariff regime from the Trump administration. I'm Oliver Crook. We have a lot to unpack this morning. Let's begin by unpacking the markets and specifically the Brent market this morning. You can see Brent crude basically dead flat this morning, but you can see this is a week that began for Brent at $88 a barrel. We now close the week at $100 a barrel, just above that price. That will round to $101 a barrel as we close out this week. You look at the MSCI Asia Pacific Index, down 2.3% this morning with that sell-off going across tech. And of course, the NASDAQ futures in the United States down about 0.5%. That is after a sell-off of almost 2% yesterday. And looking also at what we're seeing in U.S. 10-year Treasury yields, we're up only 1 basis point here. But again, we are talking about repricing across Brent oil this week. There's been a massive repricing across the U.S. Treasury curve. You can see there, U.S. yields will bring you 4.7%. That's up about 12 basis points from what we started the week at. And we should say the U.S. 30-year also, looking at the yields across that, we are nearing levels we have not seen on the U.S. 30-year yield since 2007, that very ominous year. So we're going to have to break down all of this market action. We've got an absolutely packed show today. And also, do not miss our exclusive interviews with the daughters of Africa's richest person, Aliko Dangote, our conversation with Fatima and Mariya Dangote about their roles in the family business, the plans to bring a number of those businesses public in their IPOs. That will be coming out a little bit later this hour. But for now, President Trump's biggest move yet to rebuild his tariff wall came into effect at the top of this hour. The U.S. is slapping duties of between 10 and 12.5% on imports from most of the trading partners that the United States has. It follows an investigation into alleged failure around 60 economies to prevent forced labor in their supply chains. New Zealand, which is now facing a 12.5% tariff on goods, has protested the move, saying the forced labor allegations are not credible. A similar reaction over in Australia, where the trade minister has called the levies unjustified. Let's bring in our Bloomberg managing editor, Jill Desis, in Hong Kong. Jill, so we now have a new tariff regime. What is actually different going into this? How does this sort of change the dynamic? And are we going to get now retaliation, another trade war from all these partners?
Yes, well, Oliver, I'd say that Liberation Day 2.0 looks a lot different, actually, than Liberation Day 1.0 last year. These tariffs are the result of really months of investigations, may stand up a bit more in court, which I'm sure we'll talk about in a bit. But this is a much more structured and calculated plan. We are seeing some exemptions for the tariffs. Basically, if a product is, impossible to produce in the United States, if it's, going to cause widespread economic disruption, maybe there's some exemptions there. We are seeing, food, fuel, fertilizers exempt from these tariffs. I'd also point out that the Trump administration has separately pursued some industry-specific tariffs, so those aren't covered in this particular round of this regime. So, things like drugs, some of those pharmaceutical tariffs he's discussed, automobiles, that kind of thing. But this is a very wide, sweeping impact, really timed to kind of coincide with, the end of that initial round that was struck down in court. Obviously, we're starting to get some reactions here. I'm sure as more nations start to wake up, we'll start to see some additional reactions. But yeah, I mean, this is really, it's tariff regime 2.0 here.
But thinking about sort of the future of this tariff wall, right? Obviously, the first one was struck down by the Supreme Court. We now are having these allegations about sort of forced labor. I suspect a lot of the economies who are being accused of that, particularly I can speak here for the European Union, are going to say this is totally not credible and this is just a sort of veneer to actually try to erect the former trade wall. Is the Supreme Court going to see things the same way? I assume this has been pretty heavily researched by the lawyers.
Yeah, so I think that that's really the difference here. I mean, obviously, I think, it's a pretty easy expectation that this may be challenged in court in some way. But this is clearly designed under these, sort of Section 301 code that the U.S. Trade Representative is kind of looking at here. I mean, these tariffs are enacted after sort of months of, public policy procedure, that kind of thing. So it is a pathway that is designed, in effect, to be a much more solid case that the Trump administration could potentially present were this to end up in front of the Supreme Court. I think the question is, whether or not, you have a court that interprets the arguments that they're using here to have these forced labor allegations as being, sort of an overstep of, the reading of that kind of code. I think that that's, sort of a question for the lawyers to particularly consider here. But I think, the end result here is that this is clearly a thought-out strategy to try to, put in place tariffs that do have that higher legal standing. So I think we'll have to see how that ultimately proceeds.
Well, Managing Editor Jill Desis there, thank you so much for your interpretation with that new tariff regime that is now 6 minutes old. Now, Brent crude is back over $100 a barrel after President Trump threatened to escalate strikes on Iran and hold the country responsible for any attacks by the Yemen-based Houthis on ships in the Red Sea. Stuart Livingston Wallace is Bloomberg's executive editor for the Middle East, North Africa, and Russia, joins us now. So, Stuart, now we have the 13th night of tit-for-tat strikes. We can't say that that is particularly new. Why the new risk premium in the oil market?
So, I mean, I think a couple of things. Number one is that there have been multiple reports of more US forces coming into the region, or at least coming into areas that look like they might potentially support the region. And of course, that interview that Trump gave yesterday saying that, he was at least considering plans for a major escalation. There seems to be at least some concern around that. But I think more importantly, what happened in the Red Sea yesterday with attacks on at least one Saudi tanker, potentially two. That in itself is making the oil market, I think, very nervous about supplies coming in and out of the region, because remember, the Red Sea was always that lifeline with the closure of Hormuz, and if that's now threatened, it means one of two things. Either you're going to get a decline in the exports from those alternative ports on the Red Sea coast, or those ships, those tankers, are going to have to take the very, very long way around, which is up through Suez, along the Mediterranean, and then around the southern tip of Africa to get to Asia. In either scenario, that means that it's going to be a much more constrained supply of oil to the market.
And we also have this story that we've been reporting on over the last couple of days, this possible nuclear agreement between the United States and Saudi Arabia. We're getting more details about it. It now seems that the Trump administration is linking this moving forward with normalization of ties between Saudi Arabia and Israel, the Abraham Accords. What more do we know?
I mean, it's been a very bizarre story in the sense that, none of the key points really were made until about 24 hours after the accord was signed. And so going into it, as you know, there was a lot of nervousness around quite what this accord would look like, particularly around the issue of whether you could either enrich or reprocess uranium on domestic soil. Now he's sort of really thrown a wrench into the whole process by saying it's going to be directly linked to Saudi Arabia joining the Abraham Accords. Now, the problem with that is that Saudi Arabia has made it an absolute red line for it to do so, that a Palestinian state be recognized, and in turn Israel has said that is never going to be an option. So there seems to be a total impasse here, at least on the face of it. That seems to hold the whole accord below the waterline. But again, look, we'll see. There's been lots of comments around this, and things have changed rather rapidly. So maybe in a couple of weeks from now, the situation may change again. But as of today, it doesn't look like there are a lot of options here to take this accord forward.
Well, Stuart Livingston Wallace, thank you so much for your time. That's Bloomberg's executive editor for the Middle East, North Africa, and Russia. Thanks again. Now, Intel shares jumped in late trade as its revenue forecast shattered Wall Street estimates, indicating that booming data center spending is helping fuel a long-awaited turnaround for the tech giant. You can see it there, up about 5% in after-hours trading. Bloomberg Tech's Ed Ludlow has more from San Francisco.
Intel is a CPU and a data center story. The CPU market is really taking off. That was the sort of overriding message from CEO Lip-Bu Tan when I spoke to him. And the situation is that demand growth is outpacing what is improving supply. If you remember, Intel left money on the table because they just could not meet customer orders, particularly on CPU, which is everything for them right now. So their own production and processes of their own products is improving, but they still cannot meet 100% of orders. But you look at the guide for the current quarter and the sort of 59% growth in data center, largely CPU gone, they are going in the right direction. Then it became a CapEx story. So CapEx will be more than $20 billion this year. That's a surprise, right? That's a change of plan, and CapEx will be higher next year too. And what gave Intel confidence, because Lip-Bu Tan is cautious, is the visibility they have on demand. They have a number of LTAs with customers. They look at the product side. They look at the foundry side. They would not invest into this. They don't deploy CapEx if they aren't sure of a return. There was this kind of very big reaction when the numbers hit and the commentary on CapEx. Things kind of pulled back a little bit. But for now, Intel is saying it's making progress. It's not fixed everything. Margins still aren't what they used to be. Foundry, there's a lot of questions, but they're headed in the right direction. This is Ed Ludlow for Bloomberg News in San Francisco.
There you have Ed Ludlow in San Francisco for the latest out of Intel, and we will continue the conversation on the AI trade and everything that we're seeing there. A positive story from Intel, a less positive story for the Magnificent Seven, losing almost $800 billion in value in yesterday's trade. We'll break down the AI trade with Ayesha Tariq from MacroVisor. That will be next, and this is Bloomberg. Welcome back to Horizons Middle East and Africa. Let's check in on the markets in Asia this morning. There is a lot going on. Winnie Su is here to break that down from our Hong Kong studio. Winnie.
Yeah, good morning, Ollie. Well, it is pretty much a de-risking day for Asia today, with the MSCI Asia here down more than 2% after having gaining for the past 3 days. Now, overall, it is the oil price really topping that $100 per barrel, weighing on the oil net importers here in the region. We have South Korea's Kospi index here down almost 6%. And with the higher oil prices, also those concerns around inflation, the expectation for central banks to raise rates, and those are weighing on the region's currencies as well as bonds. When it comes to Japanese yen, weakened overnight, and we are inching closer to that 164 level against the dollar. Now, it is really overall those expectations for the Bank of Japan to also raise rates further down the road. Flip the board, we take a look at the technology shares, because tech sector today really leading declines in our region. Well, the news from Intel's earnings with the revenue forecast supposed to be good news for the sector, but for now it seems like there are more concerns around those spending by the U.S. hyperscalers. And adding to that, you also have SK Hynix and Samsung Electronics, the Korean chip makers, leading declines today ahead of China's CXMT IPO expected on Monday, expecting further competition as investors trim some of the bets from these Korean names as well. Ollie?
Thanks very much to Winnie Su there in Hong Kong. A lot of red on the screen in Asia this morning. We look also at Brent crude, which would be a lot of green on the screen if you take it out for a week. This is a market now for Brent that is trading over $100 a barrel at 149 there. You can see it up about $12 on the week. Treasuries are beginning to price in prospects of higher rates in the United States. Those forces, coupled with concerns over AI spending for big tech, are also weighing on the stocks for the Mag 7. We saw an $800 billion sell-off in market cap yesterday. Here to help us break it all down and make sense of it all is Ayesha Tariq, who is a MacroVisor, the co-founder there. I'd like to start just with what we've seen most recently, particularly in the escalation in the Middle East. We now are in a situation where we have Brent over $100 a barrel. That's a $12 premium that we've added to Brent just over this week. How do you trade this in the short term?
Good morning, Oliver. Well, a great question. I mean, what's bad for the market could actually be potentially good for us. So if we are buying Brent right now, we're basically looking at a situation where the market is in backwardation, right? So prompt spreads, what we have at the moment, is much higher than the future price of Brent. And so if we do buy now, we will sort of gain on, every roll. But that's a little bit more of a difficult trade. Broadly speaking, the market, however, seems not to like Brent above 100, and even worse when WTI hits 100. So I think we need to be careful where the overall market is concerned.
Well, we're thinking about the global market scenario and the kind of the macro stories we've got. We've got a lot of negative stories, right? We've got the conflict in Ukraine that's been going on for years. Obviously, now this conflict in the Middle East. You had this very, very positive AI story to kind of underpin the sort of market action. You're now starting to have some doubt in that AI story. Where do you see the AI story going in the sort of medium term? And at a certain point, there needs to be a conversation of what the unwind looks like coming down. Maybe not an aggressive unwind, but something. And how do you position for that?
No, absolutely. I think the AI story has had its moments. And I think, overall, when we look at the technology, it is obviously useful. But now there are quite a few things that remains unresolved. Remember, we are treading uncharted waters here, right? So we don't exactly know what's next for this technology. But in the meantime, what we are seeing is spending just increasing and increasing. So I think one thing that we had pointed out earlier about the AI story was what happens when these companies start to turn to the market for funding. So all this while, we've been seeing the hyperscalers actually have massive amounts of cash flow, right? And with this recent result from Google, we see their free cash flow has turned negative, which means that they will increasingly be turning to the market for funding. So that sort of pushes yields higher, right? And there's only so much capacity that the market can have for absorbing these kind of issuances. So at the end of the day, either the market will be pulling the money out of other sectors, or they would choose to push yields much higher in order to fund this capex, right? So in which case, we're probably looking at quite a lot of rotation. And I think what we've seen in the past few weeks is when that momentum starts to, falter, we see quite a violent unwind. And so that's always something that we need to keep in mind when we look at this AI story and we're betting on AI companies at the moment.
Well, you mentioned the yield story across, obviously, for these hyperscalers kind of inundating the market potentially with bond issuance and the like. We are seeing a yield story in the United States where the front end of the curve, 2 years, 10 years, we have the highest yields we've had since January, not of this year, but of last year. You take it out longer on the curve, you've got a 30-year yield that is bringing you the highest level of yields that we've seen almost since 2007. When we talk about 2007, obviously that creates some alarm bells for investors in the market. What is the U.S. yield curve telling you right now?
So we are seeing the yield curve actually bounce around quite a bit, because yesterday we saw it flatten a little bit, which means that, the shorter end is moving up faster than the longer end. But overall, the yield curve is actually moving up, which isn't really good for the market either. And much of this has to do, one is the Middle East story, the other is the AI story. So we've got so many things just pushing yields up, not just in the US, but across the world. But I think the bigger story is probably the market pricing in hikes from the Fed and from the other central banks. Now, where that's concerned, I think we have a slightly different view. And we think, the Fed Chair Walsh is actually playing a really good game here. So this goes back to something that Mervyn King coined called the Maradona theory of interest rates, where instead of actually swerving, he ran straight during the World Cup. And so we think that, Fed Walsh could actually do that. And instead of actually hiking, he could create this hype about hiking and create a hawkish scenario where the market actually does the work for him because yields are so high.
Well, thanks so much for your analysis this morning. There's a lot to get through, and we enjoy ending on this sort of Maradona theory of macroeconomics here. So thanks very much for your time, Ayesha, Tariq of MacroVisor, the co-founder over there, for your analysis. Still ahead this hour, we have an exclusive conversation with the daughters of Africa's richest person, Aliko Dangote. We talked to Fatima and Mariya Dangote about their roles in the family business and their upcoming listings for a number of companies. That will be later this hour, and this is Bloomberg.
Thursday. The Bank of England makes its next interest rate decision, and investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Inflation is higher than we expected. Of course, now what we've got to do is get it back to 2%.
Join the opening trade team for live market reaction and analysis and on-the-ground coverage at the Bank of England. It all starts Thursday at 12:30 p.m. only on Bloomberg.
Welcome back to Horizons Middle East and Africa. Let's get you up to date with some of the news making corporate headlines across the world. SpaceX has postponed the next test flight of its Starship rocket until Friday because of unfavorable weather. The launch will mark Starship's first test since SpaceX IPO following an aborted attempt last week. Meanwhile, Bloomberg's been told the company has started to turn away satellite operators seeking launches using its stable Falcon 9 rocket beyond 2028. That underscores the massive bet Elon Musk is making on the unproven Starship. And AMD has announced new products for data centers that it says will outperform those from their rival, NVIDIA. The chipmaker unveiled new generation microprocessors, an updated AI accelerator, and a new server design. Investors took a more skeptical view, sending shares of as much as 3.5% lower during the presentation before paring losses ever so slightly. And shares of Chinese chipmaker CXMT will start trading on the Shanghai Exchange Star Board on Monday. Its marquee IPO is set to raise about $9.8 billion, making it the second largest Chinese listing ever. A successful debut will be seen as a milestone in China's drive for semiconductor self-sufficiency. Those are your updates across the corporate headlines that are making news around the world. Let's get you an update on the markets this morning. Looking at futures for the S&P, effectively dead flat there. You saw a big sell-off in the NASDAQ yesterday, down by about 2%. That selling is prepared to continue on the NASDAQ today. You can see down by about 1/3%. We're watching also very, very closely some of the repricing we have seen across some very key assets, including the U.S. yield curve. You can see U.S. 10-year yields now yielding 4.7% as we close out the week. That is about a 12 basis point increase from where we were on Monday. That is illustrating a sort of a more hawkish view potentially on inflation, what the Fed is going to have to do. We have the U.S. 30-year yield that's yielding almost as much as it did back in 2007. And of course, Brent, which is the driver of a lot of this activity, you can see there down by 1/3%. That masks what has been a massive surge throughout the week for Brent crude, up about $12. We began the week at $88 a barrel. We now close the week at $100 a barrel. We'll have much more next, and this is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Brent breaks above $100 a barrel as the war in Iran kicks back into escalation mode. Trump threatens a massive attack. Houthis threaten a second front to the war. And the AI trade falters. Capital expenditure forces investors to consider capital return. The Magnificent Seven lose almost $800 billion in value in yesterday's session, the biggest sell-off since Liberation Day. And just in time for Liberation Day 2.0, President Trump institutes a new wave of tariffs to rebuild a trade wall struck down by the Supreme Court. That new tariff regime came into effect 30 minutes ago. It is 8:30 a.m. across the Emirates. It is 6:30 a.m. here in Brussels. I am Oliver Crook. Let's get a check on your markets this morning in a day where there is a lot going on to unpack across this news agenda, this news cycle. Brent crude, as you can see on the screen there, down by about 0.5%, still above $100 a barrel. That has gained about $12 over the course of this week. We began the week at $88 a barrel, and now we're closing it out in the triple-digit territory, which will not make those folks at the central banks across the world very comfortable. You have the MSCI Pacific Index. They are down more than 2% this morning. The NASDAQ, we will continue selling that we saw yesterday, down by almost 2%, down by another 0.25% this morning. And the U.S. 10-year yield, we are closing out the week 12 basis points higher than we began the week, with yields on the U.S. 10-year at 4.7%. Let's get a check in on the markets over in Asia with Winnie Su in our studios in Hong Kong. Winnie.
Yeah, good morning, Ollie. We are seeing those factors that have supported Asia stocks rebound have really turned around very quickly, especially with oil now topping $100 per barrel, especially weighing on these net oil importers in our region. We have MSCI Asia here down more than 2% after having gained for the past 3 days. And leading the declines today, we have South Korea's Kospi Index down about 5% here. And we have, in fact, already had 10 straight days of the circuit breaker, the sidecars being triggered by the exchange. So it goes to show how volatile this market really has become. Now, flip the board, we take a look at the cross-asset picture, because it is the fear for inflation resurfacing along with expectation for the central banks to further raise rates, weighing on the region's currencies as well as bonds. We are also keeping a very close eye on the Japanese yen, which has weakened overnight and now inching closer towards that 164 level against the dollar, and in fact on track for its worst week in more than 2 months. We did also have the key inflation gauge from Japan picking up, and that is supporting the view for the Bank of Japan to raise rates later in this month. However, for the expectation for the central bank meeting next week, for now it's still expecting for a hold. When it comes to the yield space, we are seeing these yields across the region, Japan, Australia, New Zealand, all tracking those moves from treasuries overnight as well. Back to you, Ollie.
Thanks very much, Winnie Su in Hong Kong with the market action over in Asia. Now, President Trump is threatening to intensify attacks on Iran after Houthi attacks in the Red Sea opened a new front in the Middle East conflict. Escalating hostilities are also snarling traffic through the Strait of Hormuz, further interrupting flows of crude oil and gas. And joining us now is Control Risk's Maritime Security Director, Cormac. Garry. Thank you so much for joining us this morning. Exactly the person we need to speak to make sense of what we've been seeing over the last couple of weeks, the re-escalation in the conflict. Now we think about the Strait of Hormuz. I think we have now a different concept of how this is going to work going forward. At the end of this week, where do we stand on the volumes of ships that are actually able to cross the strait?
For all intents and purposes, it's near zero. Let's call it pre-war regular traffic through the Strait of Hormuz was about 135 ships per day. Right now, we're back into single digits. If maybe 4 or 5 weeks ago, when we were in a slightly more optimistic mode with the Memorandum of Understanding, that was up to maybe 50 or 60 ships a day. Now we're back to below 10. So it's really a fraction. And for all intents and purposes, it's near zero.
And you have the sort of unenviable job of trying to figure out what this is going to look like in the medium term and in the long term. There is a certain asymmetry in terms of the Strait of Hormuz, right? The United States needs to have complete control over the strait in order to guarantee passage. The Iranians just need to pose a credible threat. What does that mean for your assumptions about what this is going to look like over the next 3, 4, 6, 12 months?
Yes, we are helping some clients scenario plan for that long-term picture. It's difficult because we're also helping another set of clients plan on a day-to-day basis. So the day-to-day basis is, can I get my ship out of the Gulf tomorrow, in 2 days' time, next week? But the strategic picture, as you said, Oliver, looking 3-6 months into the future, it is pretty difficult. And it is frankly very difficult to imagine a realistic scenario 6 months from now, which is one one in which Iran does not have near full control of the Strait of Hormuz. It's very hard to picture a scenario where it's back to normal, pre-war normal. It's going to look like probably either Iran in full control of the strait and it charges fees, or full control of the strait and it doesn't charge fees, or status quo, which is what we have now, where you have a kind of a parallel system of an Iranian route and a US administered route, and then a third option, which is no sailing.
Right, but it sounds like the fourth option of U.S. control is not something you guys are considering. So when we hear those kinds of pronouncements from the Trump administration, do you think it's fair to dismiss that as an impossibility?
I don't like the word impossibility, but it's unlikely the US is going to commit itself to full combat in the Strait of Hormuz. It hasn't done so far, and if it does, it will likely suffer quite severe casualties. There's a tactical reality in the Strait of Hormuz in which Iran doesn't have to do all that much to maintain tactical dominance. Just 3 days ago, we had 3 ships attacked overnight in the Strait of Hormuz. Pretty devastatingly so. One of them was completely abandoned, and I can't fully confirm this, but I've heard good, credible reports that one of them has been seized. Now, what that means militarily is that Iran managed to attack a ship in a channel that is supposedly under US military overwatch, and then managed to send people, boats and people out to retrieve it and bring it back to Iran. So that tells you how much control the US really has over the Strait's security.
Yeah, that's pretty remarkable, and a pretty remarkable insight there. I'd like to also get your appraisal of the other side of the peninsula there on the Red Sea in terms of what volumes are being affected so far by the Houthi attacks we've seen, and also just because you're trying to game this out for your clients, what kind of control do you think the Houthis can exert over the passage there if they wanted to escalate things severely?
An important thing to remember with the Houthis is that you've got that Bab el-Mandab Strait, which cuts between the southern Red Sea and the Gulf of Aden. If the Houthis really try to shut that down completely, they will be shooting themselves in the foot. So that's a reason for optimism. The Houthis are not in a position where they need to do that, right? So they rely on shipping coming through that strait to feed them, literally feed the people of Yemen through the port of Hodeidah. So completely shutting that down altogether is very unlikely. What they've done is they've very specifically targeted Saudi Arabian shipping, which is ships owned and flagged in Saudi Arabia, but also ships serving Saudi Arabia. They've already attacked at least one, claimed 2. The thing with the Southern Red Sea is that it was already about 60% down on normal. I say normal because I'm talking pre-2023 numbers here. The Houthi wave of attacks from late 2023 up until early last year, traffic never really recovered from that. So it was already at about 60%. We are already seeing a drop, but we're very unlikely to see that going to 0.
Yeah. And I want to get your, before we let you go, your appraisal of what we are seeing on the Black Sea. We've obviously seen a massive increase in attacks by the Ukrainians on Russian vessels, whether they be crude, LNG, but also dry goods. What is your appraisal of what we're seeing on the Black Sea, which Moscow is now warning is potentially unnavigable? We've seen an effect on the commodity markets, wheat up about 20% in the month of July. What are you seeing there?
There is at least 150 ships have been struck by Ukrainian forces in the Black and Azov Sea over the last 2 weeks. And that itself is not going to have a major impact on the rest of the world. It's very bad news for Russia. But what we're watching out for is Russia's response. So if Russia chooses a response in which it really goes after shipping serving Ukraine, for example, which has implications for Russia, so it's not necessarily a very easy thing for them to do. If they do that, that could spur another food crisis, food supply crisis, like what we saw in 2022 for very specific countries, including Libya, Lebanon, Indonesia, that rely on Ukrainian shipping. Now, broadly speaking, it's also just bad news in terms of the supply of ships for the world. But that's actually where there's a business opportunity, particularly for the tanker market in shipping, because including with the Red Sea situation, it's supply and demand. There's less supply of ships available, and the tanker market can charge higher rates for the demand that's still there.
Well, Cormac McGarry, thank you so much. That is the Maritime Security Director over at Control Risk for his analysis in a very fast-evolving situation. Now, Egypt's foreign minister has called for continued efforts to de-escalate the ongoing conflict within the Middle East as the war in Iran expands to the Red Sea. Speaking exclusively to Bloomberg, Badr Abdelatty pressed the importance of the freedom of navigation.
We have to stick to the MOU. There are certain 14 paragraphs. We should stick to it, and it could provide solutions to the existing impasse. So this is what we are doing, and we will never give up, and we will continue pushing and pushing, and we hope that we can manage to de-escalate. There is a specific proposal now under discussions, and we hope that this proposal will contribute to de-escalation. And today I will meet with the Foreign Minister of Oman because Oman is playing very important role. So we are coordinating our efforts with the common objective, which is promoting dialogue, peaceful solutions, and de-escalation.
Yeah. Would you mind to go into detail about the specific proposal that is being discussed now?
Well, I believe that, there is no need now to get into details, but there is a proposal now. It's subject to further discussions between Oman and Iran, and it's with regard the freedom of navigation in the Strait of Hormuz. So we are encouraging that, and we are pushing for having this proposal to be adopted by the parties concerned, and that will contribute hopefully to de-escalation. But it's all about the navigation and the freedom of navigation.
Well, the Houthis in Yemen have announced a kind of blockade of shipping, Saudi shipping, and I wonder what impact this will have on Suez traffic.
Well, we are pushing for dialogue and for de-escalation, for ensuring the freedom of navigation in the Strait of Bab el-Mandeb. This is very vital, not only for the Suez Canal, not only for Egypt, but for the whole world trade and the world economy. So we are pushing very hard for dialogue, for de-escalation, and we hope that things will calm down in order not to have a negative impact on the trade, on the world trade, on the supply chain. As you see, what happened in the Strait of Hormuz had a very negative impact over the last few weeks on on oil supply, on fertilizers, on gas, natural gas supply. So that's why we have to ensure the principles of the international law, especially guaranteeing the freedom of navigation.
The Egyptian foreign minister there on the importance of free navigation through the Strait of Hormuz and, of course, elsewhere. But coming up next, our exclusive interviews with the daughters of Africa's richest person, Aliko Dangote. Fatima and Mariya Dangote speak about their roles in the family business and, of course, some upcoming listings that they are planning. That's next, and this is Bloomberg. Welcome back to Horizons Middle East and Africa. The daughters, I should say, of Africa's richest person, Aliko Dangote, are taking on greater responsibilities in the family business in a bid to build the conglomerate into a $100 billion industrial group within 4 years. We spoke to them exclusively in Lagos. Mariya Dangote told us about preparations for a secondary listing in London.
It will happen maybe by end of this year, the secondary listing, and we are planning to list in London because I think we compared many, like stock exchanges. London is the one very, like it's compatible with the, our business.
Really?
More easily, because if we say, because Halima is running the family office in Dubai, so before we thought of the secondary listing in Dubai, but the rules, it will make it hard, for us, to list, to do the primary listing in Dubai, because there are many regulatories, compliance that we have to do, and it will take us more years. And we have been talking about this listing, for almost like, I think, 6 or 5 years, more than that.
But you're confident this is the year?
Yeah,
Why?
I'm confident. Because why I'm confident? Because we did all our, background checks and everything, as I'm talking now, we have our lawyers, our financiers, and every other person, and even, the team, yes, are working, day and night to see if there is anything that will stop the listing. And as I'm talking now, nothing, no any constraint for now.
Well, that was Dangote Group Executive Director of Commercial Operations for Cement and Food, Mariya Dangote. Let's bring in now Bloomberg's Chief Africa Correspondent, Jennifer Zabasaja, who is in Lagos following those conversations. Jen, you also spoke to her sister, Fatima, about another IPO that's in the pipeline.
Yeah, of course, Ali, good morning to you. And of course, this is the IPO that everyone really on the continent is waiting for. It would be the biggest IPO on the continent that we've seen, which is, of course, for the refinery business. Mariya, though, was talking there about the cement business, which is the most profitable part of the Dangote Group. So it's very key, and many investors have been watching when this secondary listing will happen, especially because it's been talked about for quite some time. And as you were just hearing from her there, they are planning to, and they are on track to have the secondary listing for the cement business in London in the next few months. Now, to the refinery business, our insiders are reporting that this should also be coming imminently, this IPO that's happening here. And what we heard from Fatima, since she has stepped into this role, really working very closely with her father, Aliko Dangote, the expectation is that this is more than just the most historic IPO for the continent. She sees this as an opportunity for retail investors, for institutional investors, and really a part of their bigger growth plan for where this takes the conglomerate moving forward. Let's take a listen.
Yes, it's good that there's one of the biggest IPOs about to happen within the continent. But for me is the participation of both Africans and people outside of Africa into this story that the Dangote Group is trying to sell. When you look at it, Nigeria in particular has been exporting crude oil and importing refined petroleum products. But this refinery has changed that narrative or equation, whereby we're now having to add value to our natural resource here within the continent. And we're having to now be a net exporter of jet when you look at it. When you look at the second quarter of products, jet in particular, that went into Europe, you see that 25% of that volume came from the Dangote refinery. So we're selling a story that Africa is able to industrialize at scale. Not just at scale, but at a global scale. It's telling a story that Africa is able to conceive an idea, finance it, and manage a mega project at a global level. So it's not just IPO selling shares. It's showing the world that Africa has entered into the new phase of industrialization.
And Ali, on the same day, we did get confirmation that the group had completed its $2.5 billion private placement for the refinery. So just another positive step for the group more broadly. We're going to have more from our conversation with Fatima, Mariya, and also their sister Halima, she runs the family office in Dubai and London. So plenty more coming up on Next Africa. Ali?
Well, Jen Zavisaja, thank you so much. That's our Bloomberg chief Africa correspondent with important conversations about the IPO pipelines there in Nigeria. Well, coming up, Ukraine continues to its attacks into Russia to seek to take control and to choke out their commodity exports, hoping to put some pressure on them. We'll have much more on that story and what has been a big week for Ukraine. This is Bloomberg. Will, it has been a very big week for Ukraine. We've had a massive reshuffle at the top of the government and the military operations. We see continued strikes throughout the Black Sea. To get an update on all of that we've seen this week, we'll go to Greg Sullivan over in Dubai. Sort of mark the week for us and round out what has been a really spectacular week in terms of action and news out of Ukraine.
Right. There has been a lot of changes. First, starting with the reshuffle at the top of the military in Ukraine, Zelensky ended up removing his defense minister, Fedorov, after tensions with the commander-in-chief. That sparked nationwide protests and support of the defense minister, who was seen as a tech-savvy young reformer, partially responsible for the drone attacks that have seen Ukraine take the initiative as of late. Zelensky partially bowed to pressure, but only partially, by then removing the commander-in-chief, a Soviet-educated, old-school-style commander, and replacing him with a reformer. Though he said that Fedorov would remain on the team, Fedorov has so far resisted any of Zelensky's job offers, waiting for a comeback to the defense ministry, where he says he can then have the most influence on the war.
Well, Greg Sullivan, thank you so much for your analysis and the latest from... Yeah, well, thank you so much for rounding up what has been a really sort of important week for the Ukrainians and, of course, at the top of the government, but, of course, also in the military strikes that we have seen in the Black Sea, which, of course, are having effects on the commodity markets. And I'd like to take it back to the markets to see what we are seeing across Brent crude. You can see that up to about $100 a barrel, breaking the week, ending the week in triple digits for Brent crude from the risk premium from the Red Sea, risk premium from the Strait of Hormuz. We see the 10-year yields in the United States slightly higher this morning, up 12 basis points this week. That will be a big focus going into the next week for the Fed, and this is Bloomberg.